Hello everybody, welcome back again to the Decode, a podcast series by ZOOP. This is episode 5 and joining us we have Sahil Jain, the Principal Product Manager at ZOOP, who comes with an amazing experience in the motor insurance industry and product management. Today we'll be taking a wide-angle look in the motor ecosystem, understanding what is going next. If you're somebody who has always been excited to know who is driving growth or how the fintech is rewriting the rules, then you are at the right place. So let's get started. Hello Sahil, welcome to the Decode.
Thanks, Vidya. Glad to be here.
So let's start with the big picture in view. What are the emerging trends in the motor ecosystem?
I think there are multiple trends, and they have been in the direction has been clear from maybe almost a decade. The most obvious one is the digitization trend. The purchase is also happening online. The comparison between vehicles, a lot of new trends like AR, VR are also shaping that buying behavior, where the customer research is being democratized, or the more information is being passed on to the customer even before they enter the show. The second trend I would say is the intersection of multiple industries together to facilitate that purchase, from the financier, the banks that are supporting that purchase. Today almost 80% of new vehicle purchase is said to be done by financing. And the third is obviously the insurance aspect. Since 2018, government has made insurance mandatory for new vehicles, and so that onboarding process of a new purchase and integrating with finance and insurance ecosystem. I feel those are some of the interesting emerging trends. And lastly, obviously, the EV adoption is also one of the most talked about trends in the recent years.
So Sahil, as you highlighted about these trends, you talked about EV. We do have digital retail showrooms in place and a lot of other things that have been evolving in this industry. What, as per you, would be the biggest hit in maybe say next 2 to 3 years or 3 to 5 years?
I would say EV is definitely a good space to watch. 2-3 years, we should see a definitely good pickup. Already, I think 2.5% of the cars that have been sold in India last year, they were in EV space, and that number is expected to grow with the growth in vehicle demand. The charging infrastructure investment should also grow, and it's considered chicken and egg problems. I think they both will give each other a positive feedback, sort of a good positive feedback loop, and that should definitely accelerate the adoption.
The two big players of this industry are dealers and OEMs. Considering the fact that these days they are investing more in virtual showrooms, AR showrooms, and online sales portals. So, with digitization being at a rapid speed, the expectation of customers are also changing, and so are the margins. So, we would want you to highlight how is this bold change in the behavior impacting manufacturers and dealers alike.
So I would say this is a continuation of the existing digitization trend. Earlier, you had more prices being available online, and so more information to the customer. It sort of makes it easier to take that decision, even like more information before even entering the showroom. I think this is just an additional point there, that now you can actually even experience how your car would feel from inside, how your driving experience would look like. So from a customer perspective, it's a definite win. And if I talk about it from a dealer perspective, the customer acquisition cost has come down. Now, instead of visiting 5 times, a customer would only maybe visit once. So that I think definitely helps. However, there's the other side of it, that because more price information, more feature information is already being available online, customer is a lot smarter. So the scope for bargaining in terms of prices is a little less, which also means that that leeway that was there with the dealer has come down. So the retail margins for dealers has come down. So that is the both pros and cons of that from a dealer perspective. For a customer, it's a definite win. And I think from an OEM perspective also, it's a win. More cars are being sold because more customers are interested. They're able to make a smarter decision.
So talking about instant loans, finance is more embedded in the ecosystem than ever. So what is pushing NBFCs and banks to innovate the lending industry?
I would say that finance is already well embedded in the car purchase, car sale ecosystem. Almost 80% of new car sales are being financed by NBFCs and banks. So the innovation is largely being driven by demand because there's such a huge demand. Naturally, the effort that goes into it, and in terms of innovation, I would say what is happening is they're trying to smoothen the onboarding journey. A lot of information they would ask customer to fill or the dealer to fill. They trying to autofill based on various data systems, etc. But I think the next innovation that's coming, or the next bit of adoption that is happening, is around used car financing. There's a lot less information, and there's a lot of need to verify things. And there are certain aspects of if the car is covered properly by insurance or financing company to be able to take up to be able to give that loan. I think that is where the next bit of innovation is.
Because of instant loans and this finance ecosystem oozing to another level, we see the pre-owned car market is booming like anything. So, because there are pros, cons are attached as well. There are a lot of notorious activities going in the market, be it frauds relevant to the sector or information asymmetry. So, how can we, eliminate or at least try to lower down the chances of these gaps?
I think there are multiple players in the market that are trying to solve for some of these problems. They can maybe call out these problems. In the used car industry, because we do not have, let's say, somebody like when you're buying a new car, there's a standard brand on which you can trust that the quality of car would cater. When it's a used car, there are obviously going to be some gaps which are not easy to ascertain for the new buyer. So from the quality of the vehicle to actually the vehicle being the exact variant that somebody is saying it is. So there are a lot of frauds that happen around it. So there are certain players like I think Cars24 or some are in the market that provide certain inspection reports. There are certain services that provide you their service history, like there are products like that in the market. So I think the ecosystem is definitely evolving, but it is not well integrated. For a lot of these services, there is not a single point of contact for customers or even used car agents. The insurance aspect is also sometimes a challenge. Is the car properly insured? How do you buy the next insurance? There are certain implications around that. Insurance companies also need data around ownership transfer. So there are some gaps there, but I think that revolution is already happening. Yes, the major driver of that is demand. Currently, if let's say, there are already 1.3 times the used cars that are being sold compared to the new car. That number is effectively increased to almost 2x. So, if that means that the new car purchase also increases, and on top of that, the old car purchase also increases, that will naturally drive the innovation in the ecosystem.
So, shifting our focus to the other half of this episode, which is talking about the regulations, we see there are a lot of things that are actually impacting RTO processes, be it Aadhaar seeding mandates, e-registration or Digitalocker integrations. So how are these processes impacting the turnaround time and customer trust at registration?
I think from customer perspective, there's not a very significant change because a lot of these processes happen at the back end. It's, let's say, the either finance agents or the OEM or the agents that do a lot of this checking and addition to the database work. So the automation there definitely helps with the cost efficiencies internally to dealers. It may not have as much impact on the customer. Certain customers may even be a little concerned about all that data going to government. Not sure like if that impacts their buying decision or how they go about it. But at a broader level, I don't think customer is significantly impacted here because anyway, it's not the customer who's doing all of that manual work themselves. Mostly the dealers take care of it. However, from a registration and release of a car perspective, I think in certain cases where maybe that process was slow, that has become faster because the backend is faster there. Now the dealers don't have to do a lot of that manual work themselves. There are OCR readers that take up all this information and that is passed on to the RTOs. So all that, I think some automation there is simplifying things, but at least in 9 out of 10 dealerships, that's not a customer impacting factor.
So you highlighted about several shifts, be it tech, regulation or consumer behavior. Out of all these given things, which one do you feel is the single biggest opportunity you'd want to highlight for somebody who is willing to build the next generation motor ecosystem?
I think there would not be a single entity maybe that have to build the ecosystem. There are multiple components to it. But the part that I find the most interesting is the data part, uh, the data availability, access, and the quality. Because you have two, three industries coming together to facilitate that purchase behavior. You have the banks that have to give the loan. You have the insurance companies that have to first calculate what is the right premium to charge for that car, and then to be able to give that insurance option. And then you have OEM who obviously want to facilitate the car sale, OEM plus the dealer, and they need the other two to be able to work well with them. So the access to the right data and the quality of that is very important. I think that is an opportunity which can add a lot of value here. Maybe I can even give a few examples, and this is relevant both for new cars and used cars. For a banking industry, like for any bank or NBFC, it is very important that when they're financing a car, it needs to be completely covered by insurance and to that amount, which you call IDV or
Yes.
the insured value.
Yes.
If for any reason that is not being tracked properly, and there are certain factors in insurance industry which doesn't really be tracked properly, that becomes a challenge. So a bank will not give you a loan if your car is not properly insured to that amount. Now, an insurance company may not give you that amount because according to their database, that is not the right amount to give in a claim. So certain gaps in the industry, because the way motors variants are being calculated and their prices are being calculated, those gaps create certain issues for customers. And as a result, either they don't get full financing or they don't get full insurance. Those are very touching problems to be solved, and they can be solved by the right data being tracked at the right variance level or at the right year level when the car is used.
Well, very well answered, Sahil. Well, this was all for today's episode, but it is just the beginning. We'll be uncovering a lot of other insights about the motor ecosystem from Sahil. So stay tuned. Till then, bye bye.